A very good evening, everybody. Welcome to the webinar on how to find your trading edge. I'm Ming Hui from Phillip Nova, and speaking to us tonight will be Mr. Tom Yuen. He is a futures trader with over 30 years of training and coaching experience on topics ranging from technical analysis to money management and financial literacy. Before I pass the time to Tom, please be reminded that if you have any questions throughout the course of the webinar, you can drop them into the questions box and we will address them during the live Q&A session towards the end. And now, without further ado, let's have Tom speak to us.
Hi, good evening. Thank you for being on time, and thank you to Phillip for helping co-organize this webinar titled How to Find Your Trading Edge. All right, it's going to be a rather packed 1 hour, so I will not delay and I will start right away. Okay, so for those of you who are seeing me for the first time, allow me a couple of minutes to introduce a bit more about myself. This is where I come from, once upon a time called SIMEX. If you were to zoom in a little bit, that is how I look like in 1994. All right, now I have more than 30 years of experience as a trader. What I mean by 30 years is there are a group of us from the floor called locals. It is not an employment. Our career is without pay, without customer, with no commission, with nothing. We go there, open our own account, and trade our own money. So if we manage to make money, that is our income. If we lose money, our account would go down. So that is what I did from 1990. Yeah, so it's been more than 30 years. And today I'm going to share with you a part of my experience over these more than 30 years. All right. So of course, that would need me to come to this slide, which is called disclaimer, because by doing so, we are talking about something that can potentially be high risk, yeah, but to return for high returns. So whether it is going to be high risk or high return, it really depends on you, all right, how knowledgeable you are. And typically for this slide, I want to elaborate a little bit more that for trading, while we need to balance both risk and return is what we ultimately need to do to walk this journey with longevity. If you focus too much on risk and you ignore return, you will not get a motivation, all right, and might as well close the account. But when you focus entirely on return and you totally ignore risk, sooner or later you are going to have a tragic death, right? So remember, balancing risk and return is the ultimate way to move forward and to continue moving forward, yeah, as a trader. All right, so today's session, the title is called How to Find Your Trading Edge. It is actually a part 3 of a 3-part program. It doesn't matter if you miss the first 2, but basically I will share with you a little bit on what I've done over the last 2 months. I shared this model, yeah, to talk about if you wish to make music and you enjoy making music, you actually need 2 components. Number 1, you need to have good musical instrument and you need to know how to play them, all right? And you also need to have a good understanding of music theory. Combining this and this, you will be able to produce music. So now the words in black, yeah, is equal. So if you wish to make money and enjoy making money in the financial market, it is equivalent that you need good trading instrument and you need to know how to play them just like you play a musical instrument. You also need to understand the market behavior. We call it either market theory or market structure, all right, all of which interchangeable terms that I use. So combining instrument and understanding how the market behave, you will be able to produce money, all right? Okay, so basically my first part of this 3-part, 2 months ago, I talked about instrument. So it was here that I actually talk about trading instruments, including things like futures, DLC, yeah, things like that. So not all instruments are good and not all instruments are bad. So every instrument has got its pros and cons, just like every musical instrument. So it's important for you to need to know how you can bring the maximum out of a particular instrument. All right. So that is what I did in part 1. Now, part 2, which is last month, I actually talk about behavioral finance. I borrow this term to explain market theory, right? Music theory, or other market theory and market behavior. So because the market behavior is very much driven by human emotion. Individually, we all behave in certain way, and collectively creating this mass psychology, which I call behavioral finance, and use that to explain market behavior, giving this very simple model, yeah, to talk about the 4 emotions and the SOP to follow. That is what I did in part 2. Now, as you can see here, identifying the 4 emotions and knowing what to do essentially gives you the necessary advantage, or we call edge, which is connected to this third topic, all right, or this third part of the part 3 of the 3-part series, which is how to find your trading edge. So today we'll elaborate a little bit more on this topic on finding your trading edge. All right, when asked the question, where to find your edge, most people would automatically think about a method. Yeah, oh, this method got edge or not, 9 out of 10 winning trade, or 7 out of 10, or less than 5 out of 10. So therefore, the importance of 3M, my method money management, most people would tend to associate an edge with a method. All right, not wrong, not wrong, but it is important to take note that there is no holy grail. Yeah, it is only a method that you can find a probability advantage, whereby I borrow this word knowledge 10 years ago. I try to make people actually understand that when we try to acquire knowledge, if that L in the middle, I make it longer and split. Essentially, when we try to acquire knowledge, is to know our edge. All right, when you attend course, when you study all the way until tertiary, yeah, and continue to read more to find out more, is to improve your knowledge so that we know in which area we can gain more advantage and in which area we lose out and we do not have edge. Now, if you were to Google, right, they will give you all this definition with all this similarity, talking about advantage, to get an upper hand, to gain dominance, right? And there's only one opposite, which is disadvantage. So we focus on whether you have advantage or disadvantage, which actually lead me to that one important word called probability. I pause to let you digest. Yeah. So to have a trading edge or knowledge essentially is very closely linked to probability. So make sure this word sink into your heart. Now, what I mean by that, because many people do not understand probability, what they want is certainty, right? So it is wrong. Okay, therefore, with that probability thing, you know that finding your edge also is related to this area on money management. Now, very academic kind of presentation. People would talk about quantitative reasoning with statistics, with multiplying the probability of event with the value of the outcome of an event, right? And add everything together to see whether you have got your expected value, whether do you have a positive expectancy or negative expectancy. If it is positive, you have an edge. If negative, you don't have an edge, all right? Now, I personally do not like such academic discussion, so we will skip this. But anyhow, probability would imply needing a big sample size. So only with a big sample size, then you can determine, okay, in the long run, I have an edge, I will be able to make money in the long run. But every individual trade is going to have a random outcome. So again, that is an important aspect of probability that you would need to understand. All right, so there is one more area that you need to understand, that you have to define your edge, which is the area of the mind. This is a very often ignored area, but it's the most important area. If you do not get a proper edge in your mind, whether I give you a real edge, yeah, in terms of method or probability, you're not going to be able to do it. Now, what do I mean by that? I will illustrate with 2 slides. Yeah. Number one, if you have attended my sessions before in the past 2 years, most of my presentation, I would include this particular slide with this phrase, that trading is not an academic pursuit. It is not an academic pursuit, all right? And I illustrate with this newspaper cutting from 1993, 1 year after I joined the SIMEX floor. Now, they did an article to talk about some reality of floor traders, how much we actually make, but they are losers. But the interesting thing is, they divide us into education, qualification. And you would realize from this statistical evidence that those people with high qualification actually perform the worst. Whereas those people with the lower education, they are the one who dare to take risks, and they are the one that is making more money. Yeah. Now, this is a statistical fact, not only from this article, but for me, being in the floor for so many years, knowing so many people from educated to non-educated, let me tell you, this is true. All right, if some of you might wonder, why is that so? There are a lot of ways to explain, and I shall explain with this thing called prospect theory. If it's the first time you come across, you might want to, after the seminar, go and Google a little bit more, right? Otherwise, very quickly, without elaborating too much, prospect theory suggests, yeah, I highlight a few words to you in red. People generally, they are so determined to avoid any prospect of loss, yeah, such that they would be willing to risk losing everything. There's irony. I repeat, basically people are willing to risk losing everything just because they want to avoid losses. Now, this one typically explain how people average a losing position, all right, how people show hand, and how people do revenge trading. If that sounds familiar, that means you have this problem, their prospect theory, and it shapes our behavior. Without your conscious knowledge, it has already gone into your subconscious, all right, and therefore prospect theory suggests that we don't truly understand probabilities, even if you think you do, because we don't act according to probabilities. People actually want certainty. All right. So that is what I mean by understanding that you need to gain an edge in all the three areas of my method, as well as money management, which is important, which is an important starting point to understand this topic on how to gain your edge. Okay, so my agenda today, after the introduction and the need to know your edge or knowledge in all the three M's, I'm now going to go into talk about market structure again. All right. Now, recap, if those people attended my webinar 1 month ago, where I talk about behavioral finance, leading you to understand this four emotion, yeah, in terms of mass psychology, greed, fear, euphoria, and panic, and the SOP associated with it. Yeah, you always try to buy when you identify greed, sell when you identify fear, euphoria, too late to buy, panic, too late to sell. Now, this SOP itself will offer you the necessary edge that will give you, that will allow you to make money over the long run if you follow this SOP properly. All right. So this is an example of getting an edge in market structure. But for tonight, I will elaborate a little bit more. I'm going to give you three more pointers for you to understand the whole concept of how the market behaves. Now, the knowledge of market structure, starting with zero-sum game. Whether you know or not, or agree or not, trading is a zero-sum game. After being highlighted to you, it is like common sense. But if not highlighted to you, a lot of people would conveniently ignore this, right? Thinking that, oh, I want to come into the market to make money. Everybody comes into the market to make money. Is it possible that everybody makes money? The answer is no. It is really a zero-sum game, but this zero-sum game is a little bit more difficult to explain and to quantify, because it got to be spread over time, and depending on whether market is actually going up or coming down, yeah, whether it's in an expensive cycle or in a compression cycle. But the fact that most people lose money, 80% of the people would lose money, contributing to the 20%. So my point to you is understanding this zero-sum game. What makes you think you have an edge? You have an edge means you have to be better than the 80% of the people to go to the 20%. All right. So therefore, it reflects how important it is for you to continue to find that edge so that you can belong to the 20%. Yeah. Now, so with that, I will share something else with you. You want to learn from some people, from other people, yeah, trainers, paid course, free course, or whatever. There are some knowledge that can be shared, and there are some other knowledge that cannot be shared. All right. For example, what are the edge that cannot be shared? For example, I do have some tricks, right? For example, if people do scalping or do arbitraging refers to when the price, there is some discrepancy, yeah, that happens every now and then. They would take care, they will take advantage of this discrepancy to make money. To give you an analogy, it's like once in a while there will be money left on the table for people to scoop. Those who can recognize the opportunity will scoop the money. Now, so if someone know about this trick and teach you, all right, and teach you, what happened? You will become the immediate direct competitor. Yeah. So if you're faster in scooping, after I teach you this trick, you scoop before me, and I would lose the edge. But if after I teach you how to scoop the money and you're still slower than me, then this information is useless to you. Get it so far? So therefore, there are some edge or some knowledge cannot be shared, not because whoever is selfish, but once shared, right, it will lose the edge, especially when you announce it to the public. Yeah. However, I am an educator in SGX. I do a lot of courses. I will be teaching you, obviously, things that can be shared. All right. Tonight, I will share with you what I can share to enhance your edge without compromising mine. Starting by understanding is a zero-sum game. Now, next thing you need to understand that trading, especially the stock market, is a greater fool theory. Greater fool theory, simply put, is anybody who try to participate in the market is a fool. So how can a fool lose money, right? For example, you decide to buy a stock that is $5, yeah? Now, can you make money? You can, provided there is a greater fool willing to take over at $6. That will make you a winner. Can this fool buying at $6 make money? Yes, if there's another greater fool willing to take over at $7, right? After buying at $7, yeah, he's waiting for someone else to take over, all right? And he look at the news. Oh, all the news very good, and he's so happy. But the market is not going up, and instead it's going down. He's wondering why the news are so good. Why? Because there are no more fools willing to buy above $7, and therefore the market will not go up anymore. Now, this is something which I learned when I was newer. I understood it perfectly, and I remember how to apply this. So therefore, you would never hear me say, hey, how come news so good, market cannot go up? How come, wow, the news so bad, market stop going down? If you understand greater fools theory, you will never make that statement. All right. So this is the second point that I want to talk about. Now, relating to this second point, I want to mention a bit about fundamental analysis versus technical analysis. Without giving the definition, and assume most of you would understand, fundamental would be talking about microeconomics, macroeconomics, yeah, reading financial statement, looking at government policy, so on and so forth. All right. What edge do you get from fundamental? Yeah, information flow. When a piece of news is being announced, you get it from the internet. How do you think you can gain an edge from this? All right, are you able to interpret it better than other people? Do you get a speed advantage? Yeah, there is actually no edge when a piece of information is available and blasted to everyone. Do you get what I mean? If you don't agree with me, we don't have to argue. All right, so therefore for me, I find that there's no edge in fundamental analysis for me, all right? If you have been able to make money out of fundamentals, please continue to do so because you have found a way to do so, all right? But if you are always being influenced by fundamental news and you cannot make money, let me tell you, you have not found your edge. No edge is equivalent to losing money, yeah? So therefore, time to change your way of thinking. All right, I'm going to compare it with technical analysis. Technical analysis, a lot of people think is about chart, about finding setups, yeah, but there are something deeper than that. I like one tagline a lot. Technical analysis actually reflect the behavior of people. There are people who know what is happening. They have first-hand information. They don't tell you. But technical analysis, people can hide from you what they know, but they cannot hide from you what they do, because what they do is reflected in the chart if your eyes are trained, right? Market reach support level, yeah, you're wondering, is the market going to be supported? You confirm it with price action. If price action suggests that there are buyers, then you can have a good chance that that level is a good support and you want to join in buying. So basically that would be TA versus FA. All right, now I want to explain a little bit more on this. In part 2, right, I actually talk about this a lot. Yeah, the reasons for market movement is actually the balance or imbalance of buying and selling forces. Yeah, however, people like to use fundamentals, reasons, and news as the reason to move the market, but to me, I call them excuses. The very strong force that is moving the market, right, is none other than the human emotions called greed and fear that can manifest into euphoria and panic. Yeah, now the reasons are just excuses. A greedy person would interpret all news as good and would buy, right? A fearful person would interpret the same news as bad and would sell. So therefore, you should know already. Now, what is driving the market for this whole year is the inflation issue and the interest rate issue, right? For the same reason, people say buy, and for the same reason, people will say sell, and the market continue to go up and down that way. So how do we get an edge? Now, technical analysis basically talk about trend, and trading is a number game. It's about where this number is going, whether up or down, all right, or sideways. So TA, there are many ways to identify trend. This Dow theory is one of the ways, one of the very simple way. Yeah, market doing higher high, higher low, it is uptrend. Lower high, lower low, it is downtrend, and this is a sideways market. I am going to help you blend with fundamental analysis and how do I actually use technical analysis to help me gain the edge of fundamental. All right, now I am giving you a very simplified example. So assuming that all this up move, usually they ought to be accompanied by a decently favorable news. So when there is news that come out of the market that's being interpreted as good, generally you see the market will react by going up, correct? So similarly, when occasionally there are some news, even it's the same news that is being perceived as bad, the market will be sold down. All right. Now, so instead of micro looking at the news whether good or bad and jump in blindly, combine it with a trend. So in an uptrend, all right, in an uptrend, I don't like good news. In an uptrend, I like bad news because bad news would give you the opportunity for the market to do a correction, or we call a dip, for us to buy, right, in an uptrend. So that it will, after that, after this bad news is being digested, market will form a swing low, and the good news will take over and let it take new high. Yeah, do not go on an uptrend and chase the good news at new high, and then you become the greater fool, holding the market at the highest point and wonder why is it not going up anymore. So similarly, when the market is on the downtrend, bad news is no longer good, because on a downtrend market, bad news will cause the market to penetrate previous low and take new low. So a good news in the bear market would be good for you to sell on a rally, yeah, or to let go of your investor holding to reduce your position. So therefore, this is how I blend some of the a simple way of blending fundamentals, whether good news or bad news, combining with technical analysis to gain the edge, the necessary edge. All right. Now the next point. Next point is why index? Those of you who know me, you will know that I am a SGX trainer, typically specializes in doing index, yeah, index trading. So because I have a reason, because there are basically 6 main classes of asset classes, all right, agricultural product, so on and so forth, as you can see from here. Now, as far as I'm concerned, yeah, I also want to choose asset class based on whether I have any advantage or not. Like, let's link to the first one, zero sum game. 80% people are loser, 20% are winner. So when you choose asset class, when you choose to trade agricultural product, when you choose to trade oil, first of all, are you in the industry? What makes you think as an outsider you can gain edge compared to people who are insider? All right, they know more than you. They know things that are not even published in the news. What advantage do you have? Unless you are like our sniper trader. In our trading community, I have a sniper trader, a female, right? She is so good at looking at chart and deciding whether market will be going up and down without the need to know what this product is all about. All right, if you can reach that stage, yeah, of reading candlesticks such that you can tell, okay, next moment is going to be up, going to be down, you do a size and you sutan such, then fine. Now otherwise, for me, yeah, what advantage do I have to trade with people in the industry? So among all the asset classes, I like stock index, because the stock index, basically you are dealing with the stock market, yeah, and the stock market is a place whereby you can find the most number of losers. Now when I'm saying this, I'm not trying to be mean, I'm trying to state a fact. Men on the street, most of them will not touch agricultural product, they will not touch oil, they will not touch other things, but most of the time, men on the street, they would at some point in time touch stocks, yeah. And most of the time, these people don't like to pay for courses, and they don't like to spend effort learning. And when you don't gain knowledge, you would inevitably be a loser, or otherwise I like to call them contributor. So therefore, since they like to contribute, yeah, if you don't go and take the money, then 也是很对不起他们啦. So really, really, I'm not trying to be mean, right? So if you don't take, other winners will take, yeah. So therefore, I like to go to asset class whereby there are more contributors. So that is the one of the reasons why I am still a fan of the stock in the stock class, yeah. So okay, so with that, I have gone from introduction to gaining an edge to knowing more edge from market structure, and I would now talk about the knowledge on index futures, yeah, which is the core of my presentation for today. And I would use SIMSKI to give more discussion, right, more detailed discussion to illustrate what edge I'm trying to share with you guys. So first of all, there are 3 points which I want to share with you, but before I go on, do take note that the following discussion is non-academic. So don't try to intellectualize it and try to understand things like as though you're attending a class like that. I want you to be able to try to king a little bit. Even if you cannot immediately understand what I say to you now, you try to remember the concept that I try to deliver. You go and digest and king a little bit, the edge will become yours. All right. I promise you that will be the case, provided you know how to king lah. Okay. Now, so therefore, knowledge on index, I would share with you 3 pointers. Number one, of course, let's properly define what is equity index or what is stock index for people who, especially for people who do not know. Okay. All right. We have heard of Hang Seng, we heard of Dow Jones, we heard of whatever. A stock index basically is a collection, a basket of blue chip stocks that represent the country. all right, and it is a barometer to measure the financial health of a country. So every country will have their index lah, huh? If the index is up, means the country basically is doing well and is strong, and if the market is no good, the country is no good, their index would basically be going down, reflecting the whole basket of blue chip stocks not doing well. All right, so that is the definition of index. And from the floor, these are the various instruments that we have to trade, other than like interest rate instruments, energy instrument. We have a majority of stock indices. We have Thailand index, Hong Kong index, India index, Taiwan index. Today, I want to share with you our local indices, which is STI and SIMSKI. Okay, all right. Now, to share with you the edge, it is, of course, there are some general characteristic that all the indices share, but when you decide to trade a particular index, there are also some peculiar characteristics of individual index belonging to that country that is not available in other countries, all right? So therefore, like for example, if you heard of S&P 500, now what does that mean? S&P 500 comprises of 500 stocks. 500 stocks is very broad-based, so it is good enough to really represent the general economy of the US market. Now, you heard of Nikkei 225, okay? Nikkei 225, why is it 225? Because there are 225 stocks that made up the Nikkei index, yeah? So therefore, it's also very broad-based. However, our market, now, I hope all of you know that we have an index called STI. That is our national icon, yeah? Now, again, I'm not too sure if all of you would know that we have a SIMSKI. By today, many of you ought to, if you have been attending webinars, right? Now, so what is the difference? Just like the US, they have Dow Jones, S&P, they have Nasdaq, they have the Russell, yeah? So in Singapore, we have STI and SIMSKI, but we are not as diversified as those four indices belonging to the US that I've mentioned, which represent different sector. So STI actually is being owned by SGX, by SPH, and co-owned and calculated by FTSE, all right? Whereas MSCI is actually an American company, try to decide what component stocks fit the criteria to go into an index. So therefore, representing Singapore, we have STI and we have SIMSKI. Okay, now the difference is compared to S&P 500 and Nikkei 225, the STI component, used to, or rather STI and SIMSKI used to be very, very correlated, at least 97 to 98% correlated. So you look at the year 2017, how STI move and how SIMSKI move. Basically, they mirror each other. That is what happened to our STI and SIMSKI over the last 2 decades, right? But things would change because the components in the index can change. So what happened this year, right? This year so far, can you see STI from 31st December, it went up, while this year is a bad year for many countries, STI basically stayed positive all the way until the very bearish June, right? When most of the indices in the world actually were being sold down, STI also lost all the gains and fought around the year-end closing price until the recent rise in July, August brought it up again, Now, so you see, while the STI is actually holding positive, SIMSKI this year is behaving differently. It basically struggled and dipped below, went up, tested resistance, and stayed negative all the way until today. Now, why is that so? That is because actually MSCI decided to change the component and put one counter into the SIMSKI, all right? And that counter is called SEA. SEA is very, very unique such that it is a foreigner, meaning that someone, a Chinese who came here, become a Singaporean and start up a company that is started here, founded here, and then decide to list in Nasdaq. Now, so such a combination is rather unique. So I don't have any history to follow, that a foreigner becoming a citizen, start a company that is so great, and then decide to list it in another country's exchange. All right. So therefore, MSCI decided to include SEA into SIMSKI, right? But it is not in STI. So what happened was, you can see that some time ago, from about the price of $40, SEA started to chong all the way up till almost 9 times, almost 9 times, 10 times. Now, this is what stock traders love, 9 bagger. All right, it is about during this period that MSCI announced the inclusion of SEA into SIMSKI, but due to the heavy market cap, yeah, it has to be phased in slowly. So therefore, it took about 1 year to phase in. And after it started phasing in, what happened? Whatever reason, right? The SEA started to give way, yeah. And by the time it dropped to this level, it gave back 85% of from the high. So this is the reason that caused SIMSKI this year to deviate from STI because of this component. Okay, this component called SEA. All right, now again, go back to comparing, yeah, the difference between S&P 500 and Nikkei 225, whereby they are so broad-based. Our market, the STI, has got 30 component stocks, yeah. If you can't see clearly, never mind, you can Google, it's easily available. But SIMSKI, some time ago, also have 30, but along the way, right, the changes has happened until I checked, yeah, just yesterday to prepare for today's session. As of today, there are 20 component stocks. So can you imagine? 20 stocks determine the fate of SIMSKI. Now, I did not show the 20, but I highlighted these few company because the uniqueness about Singapore market is, even with STI, 50% of STI or SIMSKI is being determined by about 4 counters. The 3 banks, yeah, basically DBS, UOB, OCBC, together with Singtel, right? They comprise 50% of the index. Now, so what do I do with such information? A lot of people, when they trade something, they try to find an indicator, correct? They find a buy trend indicator, overbought, oversold indicator, basically to use this indicator to help them to guide what the market is doing. Now, so don't you think that if you have 4 stocks, yeah, that make up 50% of your index, the 4 stock itself is my indicator. So I spent a lot of time trying to analyze the 3 banks, yeah, and how they move. If let's say they are bullish, they are bearish, or they are sideways, they would surely contribute to the trend of the index itself. All right. Now you have SIMSKI. We have something different. We have SEA. When SEA were decided to include in SIMSKI, that was when SEA moved to a very, very high level with such a huge market cap. The weightage in SIMSKI is about 25%. Do you know that? But the thing is that while it was trying to phase in, it loses the value such that together with the drop in market cap, today, as of about yesterday, the market cap for SIMSKI for SEA has dropped to about 11%. Still, this is quite a heavy weightage such that SIMSKI's movement up or down can influence or rather SEA's movement up or down can influence the SIMSKI movement quite significantly. All right. Okay, so with that, having explained to you, yeah, with the knowledge, so you know how I want to gain an edge to whatever index that I'm trading. The second point I want to share with you is the futures trading hours. All right, you see, this is a slide that I use to teach my students because in for my courses for SGX, we of course will choose the SGX product, and these are the 4 popular indices, yeah, that we like to trade: the Nikkei, the SIMSKI, the Taiwan, as well as the China A50. And I need to make my students understand the contract specs, yeah, in terms of trading hour. All right, so I'll explain to you, focus just on SIMSKI. All right, okay, the red color part is called cash timing. Cash refers to the stock market. So all of you should be familiar with the Singapore stock market timing is from 9 to 5, yeah, with a 1 hour break in the middle. So the active trading hour will be from 9 to 12, break for 1 hour, and then 1 o'clock to 5 o'clock. All right, so futures, yeah, the index futures would of course be a derivative and they will follow the cash market timing, but futures would always engulf the cash timing. All right, so we will open earlier at 8:30 and will close later at 5:25 with no lunch break in between. So the cash market will move within the red color timing and futures will span across this. Now this portion that coincide with the cash market timing is what we call T session. So for futures trading, if we call T session, we're referring to this gray color timing. Okay, now after the cash market close, whatever happened in the world, yeah, that caused the market to go up or down, stock players, you can't do anything because your market is closed. However, futures after closing here with a short rest between 15 minutes to 30 minutes, depending on which contract, it will reopen. So SIMSKI would close at 5:25, it will reopen at 5:50. It will continue to trade all the way until the next morning, 5:15 a.m. In fact, all the rest of the SGX index futures, after their cash market close, after reopening, they would also continue to trade all the way until the next morning, 5:15 a.m. And this period in black is what we call the T+1 session. So take note, if you talk to a futures trader, trading SGX product, this is T session, which correspond to the cash timing, and this is the T+1 session that the stock has already closed, but the futures would continue to be tradable. All right. Okay. So this information, does it suggest any edge or advantage? Basically, to show you, now to show you I have defined the SIMSKI futures just to show the cash timing, all right, and the other one to show the extended hour with T+1. So you see, this is last week's movement. Last week, I boxed up Monday, Tuesday, Wednesday, Thursday, Friday. So this is equivalent to the cash market timing, whereby it opens from 9 to 5. Okay, 9 to 5. So Monday 9 to 5, stop. Then Tuesday 9 to 5, stop. Wednesday, Thursday, Friday, right? So you see, if things happen after 5 o'clock at night, whether the market go up or come down, whatever event, stock players, you can't do anything because your market is closed. Yeah. But look at futures. Futures after the Monday close, Monday close, it will continue to trade in T+1. Okay. And after Tuesday close, it will continue to trade in T+1 all the way until 5:15 a.m. the next morning. Now, basically, what would move this T+1? Very rather obvious, quite common sense. There is no stock market to follow, therefore it will just move following the Western market sentiment. So if US market is strong in T+1, it will generally trade up. If the US market is weak in T+1, generally it will trade down. So in other words, the movement is being driven by Western market sentiment for T+1 timing. All right. So next thing is, now, having understood what is stock index, the components, whether it is important or not, and understanding trading trading hours, the third point I want to share with you is the relationship between cash and futures. Now, futures is a derivative, and it would move basically very close to cash. In fact, it should move close to cash because it is supposed to trade according to cash value, and that is how arbitrageurs will take advantage when there's any discrepancy between cash value and futures value. Now, that is beyond our scope today. Anyway, I'm not an arbitrager. Arbitrager will also not teach you their edge, because once you learn from them, you will become their direct competitor. All right. So therefore, this is to show you the relationship between the cash and the futures, how similar they are and why they are different. Now, I use S&P to show you, because you can find a S&P index. All right. This is available very easily, and you can also find the S&P futures. All right. Whenever you want to trade a futures, make sure you understand thoroughly the contract specs, because every future has got a different contract specs, including the tick size. One tick jump by how much, the contract size. All right. And then the limit move, and then the timing. And then things like that. So you need to find out. So if I put them side by side, you would know that S&P index will move like that. S&P futures would mirror very closely to the index, because it's supposed to be a derivative that is similar to this, right? Okay, so having understood that, I would now share with you the SIMSKI futures and the SIMSKI cash itself. Okay, so therefore, you will see that our market basically has got a unique characteristic. This is something that doing training for SGX for the past more than 10 years, focusing on SGX product, especially focusing on our national icon, which is the SIMSKI. Among all the different things, there is one unique characteristic or behavior of the SG market, whether you are aware or not, that we are not as volatile as other market. All right. I have, over the last 10 years, people who come to my course, including people before coming to my course, attending my preview, will tell me, why are you promoting SIMSKI? It has got no volatility. This is my favorite answer to them. Everything has got a advantage and disadvantage. Things are volatile, you say, okay, it's advantage. But if you cannot handle volatility, it becomes a disadvantage. All right, I'm sure you understand this. So when you say SIMSKI has doesn't have too much volatility, is it necessarily bad? No, no. Now let me share with you what people mean by low volatility. SIMSKI every day not 100%, but statistically, I would say out of 10 days, at least 8 days, it will not be able to travel beyond 1%, whether up or down. Okay, unlike some of the volatile indices whereby they can go of course, less than 1%, they can move up or down 1%, 2%, just like last Friday after the Jackson Hole meeting. Yeah, you have the US market dropping between 3 to 4%. Under extreme cases, right, they will move beyond 5%. I'm talking about index, stock even more drastic, right? But our market typically 8 out of 10 days, it moved 1%. The fella got the rest already, like an old man like that, Chuan got the rest. So for SIMSKI or for STI to travel 3%, which is about 100 points of STI, right? For STI to move 100 points is not common for me to see that it has to take 3 days. One day, 1%, another day, 1%, another day, 1%. It will take 3 days to climb to give it a 3% move. Now, so that is the characteristics of our market that if you wish to trade, you ought to know. Now, so what is this? How does I convert this into an edge? So once the market closed, for example, this is a Monday, the Monday closing price, right, where the cash market is, I know that the next day, statistically, moving up 1% or down percent would be where it will meet with a rather strong support zone or resistance zone, just based on the characteristic. So during T+1, all right, when the market move without the cash, in T+1, if the market can already follow US sentiment, move up 1% or down percent, what do you think I would do, right? If this, don't forget, this thing actually stopped at T session close, which is at 5 o'clock. So which means that tomorrow's market, all right, moving up here and down here would give you the statistical support zone and resistance zone. So if the market can reach this zone at night, it would be a very good place for me to enter long position here or to enter short position here. And I would be able to comfortably hold this position, right? Even if it would go against me, I can manage this position tomorrow, because for the market to reach here tomorrow, STI will have to down 1%, for it to reach my entry price. So this is how I used to enter my position in T+1 in the past, and that gives me the advantage, the necessary statistical advantage. All right. Okay. So therefore, you can see that the closing price during T session would be equivalent to all this closing price, that I take note to determine 1% up, 1% down over T+1 as well as tomorrow's T session. This is what I used to do. But things change, things change, because SEA's trading hour is SEA is listed in NASDAQ, not in Singapore. So therefore, SEA is not traded during our Singapore timing, and it is traded in NASDAQ timing, which is during our T+1. Now, incidentally, why I decided to do this is because when I was discussing with Phillip Nova on what topic to discuss over this 3-part session, someone from, I'm a Phillip customer myself, all right? So I talked to someone from Phillip. She told me, ever since this SEA come into the SIMSKI, there are a lot of veteran SIMSKI traders say that they are not doing very well, right? They're not performing very well. So, well, then she said, hey, Tom, you seem to be okay, and your students are doing okay. So I told them, well, because we can adapt to these changes that maybe they cannot. So I hope this session would help whoever you are out there that is a veteran SIMSKI trader and you find some difficulty with the latest changes. I hope my session can help you. All right. Now, so take note, SEA's movement is during T+1, which means that in the past, the cash value is fixed here. Whatever happened here is without the cash movement. But now with SEA moving at night, the cash value also move at night. All right. Now, there is no chart to track SIMSKI cash. So every morning I wake up, I would go to the MSCI website to check what is the closing cash value, right? This closing cash value very often would be around the closing price of futures as well. So therefore, right now, since about a few months ago, I need to change this fair closing price to the T+1 closing price, and the movement of STI, the 1% up and 1% down, to give me where the natural support and resistance boundary has to be measured from T+1 closing cash value instead of from T session closing value. That is the change that you would need to make if you have been following this statistical volatility of our local market. All right. So therefore, now I need to take note of the T+1 closing level instead of the T session closing level. So from here, you can now visually see this is last week's market. All right. 1% up or down, it can't go that much. Tuesday, it go about 1% down, 不能动了. Wednesday, within 1%. Thursday, reached about 1% up. Friday, right, was rather quiet. And then you have the Jackson Hole meeting that caused the US market to tumble. So SEA also tumble. The market in T+1 gives a bearish engulfing, followed by a drop of 2%. Yeah, 2%. So therefore, over last week, the preparation, when I was doing my session with my students who have attended my course, I told them the cash value is actually somewhere here. All right. But T+1 has already moved ahead and it has dropped 1%. So be careful. On Monday, unless we go way beyond 1%, otherwise, right, selling around here, you won't have too much profit potential during Monday T session, which is yesterday. All right. So these are some of the things that just on the information that I've shared with you would give me the edge, yeah, to summarize with this SOP. So of course, it depends on your bigger picture, on your local market, whether it is sideways bias, up bias, or down bias. So therefore, if it is sideways bias, right, I would focus on sideways. There's no trend bias. So if the market is sideways bias on my analysis, if the SIMSKI can go up 1% or down 1% during T session, that would be a good place for me to trap the market and go long and short at the respective place. But if the SIMSKI is actually on the uptrend bias, all right? If uptrend bias, I would want to long as low as possible or as soon as possible before it reach 1% up during T session. Because once the market reach 1% up, chances of it going higher is actually very low. Not impossible, but very low. So same thing, if the market is down bias, I want to get in soon, yeah, high enough before it reach a 1% down. So these are some of the things that I conclude for you when I derive my edge from the understanding of index and the Singapore market, right? So let me warn you again that the following discussion, or rather the past discussion, is not academic. As you can see here, if you say, Tom, I don't understand, well, just remember what I say, go back and gain a little bit. If you're totally new, then maybe it's a little bit difficult to follow, huh? So warning. Now, what I've said, right? What I've just observed, this is not the only thing to watch and observe to derive my edge. This is one of my edge. And together with other things that I understand, including the technical indicators, you put together that will enhance your trading probability advantage. All right. And what has been discussed so far may not apply to other indices, because other indices, you won't have the component stocks trading at different timing. Yeah. But the cash market close already, the futures moving outside cash market hour, yeah, that it can't run too far, it has to wait for the cash market to catch up. Now, this concept is applicable to most of the other indices as well. So I hope that can help you understand what I mean by edge. So let's do a quick recap. Now, you attend this session because of this write-up, all right? So what is a trading edge? Yeah? I have basically given you my explanation in today's candid sharing, and I also try to help you understand and hone your skill, yeah, to how to improve this. So therefore, the last thing. Now, this is our sniper trader in our Facebook that she posted just about a month ago, all right? In Chinese, 扬长避短, 扬长避短. To translate into English, it means that to push your strength and to avoid your weakness. So while people try to look for a trading edge, you must do a lot of self-reflection. Yeah, I used to in the past two session, I quote 孙子兵法, 知己知彼, 百战百胜. All right. In Sun Tzu's Art of War, no tie self, no tie enemy, a thousand battles, a thousand victory. So therefore, in your quest of trying to look for an edge, you must know yourself very, very well. What are some of your strengths? And what are some of your weaknesses? Now, I'm just verbally tell you two more things about what is the meaning of Yang Chang Bi Duan. Some of the trading strategy can be very fast, yeah, requires speed, and you have a lot of trades within a 2-hour session. All right. Now, such strategy very often require your ability to identify trading signal very quickly, recognizing trading candlesticks perhaps, right? And your fingers must be very quick. So if someone were to show you, hey, you know, this method I can make so much money, pass to you, but you are not fast enough, you are slow. Therefore, this method, despite how good it is, has got nothing to do with you, because you will not be able to play out, yeah, the full potential of this, because it requires speed. So you can ask yourself, do you have the advantage of fast finger so that you can trade strategies that require speed? All right, I'll give you a second example. Some method don't require speed, yeah. Maybe 1 month there are only 3 trades, but you need to wait. You need to really wait for all stars align for the setup to appear itself. Now, on average, you will still get about 3 trades a month, all right? But what you need is patience. If you don't have the patience, then this method given to you, you simply cannot wait, and you jump in without any advantage, yeah, and FOMO, and then you come back and tell people, hey, I don't make money leh. So speed, do you have the advantage to trade setups that require speed? Do you have patience as your advantage to trade setups that requires patience? Yeah, just to give you 2 examples. Now, what are your strengths? What are your weakness? You need to know thyself in order to hone your edge. All right. Okay, let's do a final recap. Now, having on this part on knowing market knowledge, yeah, I've given you the idea of zero sum game. You only 20% people make. What makes you think you belong to the 20%? You got to understand this. You got to find your edge so that you squeeze to you cross the boundary and become the 20%, yeah. And then greater fools theory, all right. The idea of greater fools theory will not make you talk about, oh, the news so good, one market cannot go up. The news so bad, one market, you know, it cannot go down, and instead it chong. And then understanding zero sum game, greater fools theory, we talk about index, whereby there are a lot of contributors, yeah. So you need to put in the effort to keep defining and redefining and increasing your edge. You will be able to make money in this asset class, which I find is rather easy to understand. And to further elaborate on index futures, that is when I give you the knowledge of what is an index futures and what are the components, and why some market you need to go dig deeper into understanding the component, because it's a big a weightage of the index, all right. And then the trading hour, how understanding that would give you the edge, because it's related to the relationship between cash and futures, yeah. Futures will move ahead of cash during T+1 session. So understanding this, and the 1% cap is applicable to SIMSKI, but not other markets. Other markets can actually run, right? And for SIMSKI, it's not 100%, but it's like 80% of the time, which is a very good probability. Now, so this is to recap what I've gone through with you. And I use SIMSKI as an example to illustrate, right? Okay, after the recap, with the remaining time, please allow me about 5 minutes to talk about my course, yeah? What I do and what I teach, and how and where to sign up. Just one slide. Those of you who know, actually, I do training for SGX, and then over these last 2 years after COVID pandemic lockdown, they put my program up for a IBF funding. So my 2 days BMT course, yeah, spent over 2 full Saturdays, will be starting this Saturday, this weekend. So this Saturday, full day, next Saturday, full day, all right, followed by a 12 session of handholding that spent over 1 month. So for slightly more than 1 month, I will be teaching you more things to enhance your edge on top of what you have listened to me for this session. So we go into details of understanding futures and how I develop the SOP to follow. Yeah. Now the cost itself is $2,000, but after IBF funding, you will get either a 70 or 90% funding, depends on your age. If you're 40 years and above, all right, Singaporean, you will get a 90% funding, which means that you need only to pay $200. But if you are below 40 years of age, or if you are a PR, then you will get 70% funding, which means that you only pay $600 for this particular course. Okay. Now I am starting this course this Saturday already, so therefore the deadline, I asked SGX to extend to tomorrow. Tomorrow is the ultimate final day to sign up. So if let's say you are free this weekend plus next weekend plus the subsequent 12 sessions, yeah, you're welcome to call SGX Academy to register tomorrow, please do so, because after tomorrow it will be closed. All right, you can quickly scan this thing to lead you to the SGX Academy website. For further details, I will elaborate here, but if anything that you're not sure and you wish to ask, call the academy to find out more. All right, okay. And finally, if you are not free to attend this course, this would be the last slot available for me to run this year. I might have some more courses next year, yeah, similar to this, but I do not know when. So if you wish to, you cannot come for this course and you wish to see when else I will be running any more courses, you can write to me and ask me to inform you when I have my next course available. So very quickly, you might want to take out your phone and capture my email so that you can write to us and we will inform you when I have courses that is up for running again next year. All right. So with that, yeah, my timing not too bad. Is before 8 o'clock. I'm done with my presentation today. So I hope that I have really given you in a very candid manner what I mean by trading edge. Yeah, not academic, from a real trader over more than 30 years. Thank you very much. And let's hand over back to Philip to see if there's any question that I can help to address.
Okay, thank you, Tom, for your sharing. Moving on to our Q&A segment, our first question for the night is, what do you think about solely relying on technical analysis to find an edge?
It is possible, but you must be very good. You must be very good. Am I at that level? I must say no. Yeah, because in our training community, I 一山还有一山高. I see someone who is at a 炉火纯青的境界. Now, occasionally you might hear me mention about our sniper trader. My sniper trader is so good at candles reading that not all the candle, but when a setup is available, she can say with Sheila, 100% certainty, next candle is going to be up or next candle is going to be down. That kind of information allows her to, over a very short term, use size to take the money that she wants, and she can close shop within 15 minutes. All right. Now, but this kind of thing, I'm not saying that it can be learned easily. But I'm trying to use this example to share with you that there are people who are able to use solely technical analysis without any other thing and take money. Okay, it is possible. It is possible. But is it possible for everyone? Well, no lah. That depends. For me, I would say that it gives me a lot of edge, but I still need to improve my edge. And just like over the last 10 years, when I started to do education, a lot of people ask me about fundamentals, right? And that is how I know I'm not good at fundamentals, but I've incorporated news, yeah, to talk about good news or bad news, to incorporate as an indicator to enhance the technical trend for me. So I hope my answer is okay to you.
Okay, thank you for your answer. The next question is the SIMSKI a small cap index?
Small cap index? No. No. I wouldn't call it a small cap index. Well, in the first place, I'm not like fund manager kind of people that can know a lot of all these financial definition. SIMSKI, well, SIMSKI, right? We call it SIMSKI because it is SIMSCI. SI in front stands for Singapore, right? Singapore MSCI. So you have Taiwan MSCI, you have Hong Kong MSCI. MSCI, you go and Google. I think, if I'm not wrong, it stands for Morgan Stanley Capital International. It is a group in America that has a very strict criteria to decide what they want to put into every country's index. Yeah. Okay lah. It is a public seminar. I don't want to say the US arrogance, but basically, it's almost like they say, I don't trust Singapore to put your own index. I don't trust Hong Kong to put your own index. Based on our strict criteria, these are the stocks that can go into your index. So therefore, we have SIMSKI, all right? Based on those stocks that satisfy the criteria, it will put inside. Our three banks are in the index, yeah. SEA, quite heavy cap. So I do not think it is right to say that SIMSKI is a small cap. No.
All right, thank you, Tom. We don't have any other questions. Oh, sorry, one question just came in. Someone is asking, are the SGX single stock futures worth trading? Because they seem to have very low daily contract volumes.
Very tricky in public webinar. You ask me this sort of sensitive question, but to give you the very honest answer, we need to trade futures with decent volume. Don't want to get into a contract with low volume such that you have difficulty getting out. Yeah, so that is the generic answer. I would like to answer this way instead of telling you whether you should or should not trade certain thing. But I guess the answer is obvious enough, huh?
Okay, thank you. The next question is, which indicators should one look at if they want to detect price swing action within a trading day, or simply just looking at price action based on candlesticks?
Oh, there is no one standard answer to this. Now, I always tell my students, all the different indicators, yeah, or different strategies are like different way of fighting Kung Fu. So it's almost like you say, oh, which Kung Fu is the best? Yeah, there's no single best Kung Fu, and there's no single best weapon. Some people like sword, right? Some people like Tolong Tao, for that matter. So therefore, I can only say that there are certain indicators that is very useful for intraday trading, but you have to find out the pro and cons of that indicator. You have to see whether it match your personality. All right. After saying all these things, of course, I should always give you some answer. Now, candlestick definitely is important to identify price action, right? But there are people who spend many years and still cannot get it. Yeah. But like our sniper trader, her candlestick is 炉火纯青. So she can tell me I can use a blank chart just with candlestick and I can take money out of the market, and I can take a lot of money out of the market. So if you are good, any single indicator would be good. I also used to hear this tagline when I was new, right, in the 90s. I heard those people in the 80s. In the 80s, that I'm not very advanced. I always hear a lot of great traders. They would make such a claim: I can make money with a single moving average. Okay. Today, I hear people tell me moving average is a lagging indicator. Long time ago, there are good traders that can make money with a single moving average. Yeah. So okay, to give you one more answer, for intraday trading, go and learn pivots. Pivots is a very interesting concept. It's a standalone concept, yeah, that can give you a lot of information. Incidentally, that is one of the things that I teach in my course, yeah, because it is so good. So, right, to answer your question, yeah, which are the indicators? These are the few things that I would suggest that you explore and try to master them. It would be good enough.
Okay, great. Thank you for your answer. And due to time constraint, we'll pick one last question for the night. And the question is whether it's possible to earn monthly income just by trading, and how many trades does it usually take? Does the Yuen usually need to execute for survivability?
I have been a trader for more than 30 years, and you ask me whether is it possible or not, the answer obviously is yes. But if people ask me, not you, right? Over 10 years, I've been doing public seminar for SGX. I remember a very standard question that one old uncle raised the hand and say, Tom, I attend your course, yeah, and do day trading. Can I become a millionaire? I still remember my favorite answer to him. I say, thinking that you can attend my course and do day trading and become a millionaire, that is not called day trading, that's called daydreaming. All right. So basically, you need to put in effort. Yeah, it's just like anybody who wants to learn kung fu. Can you become a world-class kung fu master? Maybe, maybe not. But if you put in the effort, would it be able to at least help you have a strong, healthy body and defend yourself? Right? I think the definite answer is again yes, lah. But depends on individual aptitude and attitude. How fast or how slow you can achieve that, it really depends. Yeah. With all honesty, when I achieved consistency from the floor in 1993, I started to do public seminar just to tell people, if you want to make money in the financial market, please do like me, quit your job, join the floor. Honestly, I did that for a few years, and I realized that most people look at me with fear in the face. Yeah, well, you ask me to quit my job and join the floor. That is when I realized that majority of the people are not risk taker. People dare not take risks. I'm telling you a true story. All right. So now, among my students, our students, you say, are there people who make money? Yes, I have students who under the sniper training make a lot more than me. Now, how much is a lot? They're able to make 6-digit income in one trade. I have students who manage to make $1 million in 1 month. I am not exaggerating, because they are supposed to post proof of trade. All right, that means they actually put entry exit and they post in the Facebook. Yeah, but can everybody do that? No. Are there people who are still struggling? Yes. So therefore, I'm giving you a very comprehensive and complete answer that is it possible to make money? Yes. But can everybody do it? It depends. It depends on you. All right. I hope
All right,
I
thank
hope you're
you.
satisfied with the answer.
Yep, thank you, Tom. We will conclude both the Q&A as well as the webinar here. And for the questions we didn't get to, we'll answer them via email. And if our audience has any further questions for Tom, you can send them to us via the survey that will appear at the end of the webinar, and we will get back to you via email as well. So, yep, this was a very insightful session. So thank you again, Tom. And thank you very much, everybody, for your time tuning into this webinar tonight. We will be sending everyone a link to today's webinar recording so you can watch it again if you'd like to. So yeah, that's all for today. Thank you everyone, and goodbye.
Thank you. Bye bye.